Hi, everybody. I'm going to screen share. Sorry about the technical difficulties. Nice looks by Ricardo on those two alternate scenarios in the S&Ps. Thank you, Rick. I think eventually we will go back to that 2030 level. That's what I'm looking for. I want to thank Ricardo for that nice look in the S&Ps. I'm not sure if we still have time to do the interview with Can you guys see my chart and hear me? See me here? See the chart, hear me? Okay. Waiting for Alien. Mauricio is going to invite Alien, and we'll get a review of what he's looking for. Stand by for Alien. Are you there, buddy? Waiting for Alien. Yen's coming off. So we're going to probably get that pulled back in the S&Ps as Ricardo forecasted. Yeah, I guess there's all kinds of issues. The live status is not working on YouTube.
Hello.
Hi, Alien. How are you?
Hello, Adele. Fine.
How's it going?
Fine, thanks.
Okay, great, man. Why don't you just start and tell us what you're thinking coming into this week now that all the money and summer vacation's over and everyone's coming back to school.
Well, the market is about to make its move now, and we are.
Which one and which way?
Could you just give me a few seconds
Sure.
to prepare my chart? Thank you. So we are already starting the.
Yes.
Live. Okay.
You're live.
Okay. I wanted to say thank you for this great community. Thanks for this opportunity, and Larry is a great place for everyone to enjoy trading. So
thank you. I'm glad you're enjoying yourself.
Okay.
You know, there's got to be more to trading. We have to also have fun, right?
Yes.
It's not, and sometimes we get a little too intense about everything being life or death if the trade works or not.
No. So let's start with a small talk about the Shemitah where we left last time, and I will be getting into the market, finishing with the dollar. Okay.
Sure.
Okay. So everybody is afraid of the coming Shemitah and maybe a possible market collapse, which it's happening every time we have this kind of event. But if we take a look at the past, I found that
I'm not
before
seeing
the
your chart. I don't think I'm seeing your charts on Google
uh,
right now.
yes, I'm not sharing for now, but
Okay.
okay, I'll just okay. Let me
Yeah, it's a
have
control up on the left-hand corner. It's
yeah
like an arrow, and then you click it. It says share screen, and then it'll
yeah.
give you the box.
It's first time to share with
Yeah,
Google.
the
Okay.
you're live in the Hangout. We're hanging out in the Hangout.
Yes. So this is you're seeing the screen for now. It's working, or I need to.
Yes, it's working now. I can see it.
Okay. Okay. But uh, let me do
Okay, so
this.
we're looking at the S&Ps. There's a box in the way. I don't know if I can move it, but that's interesting. That's
Uh,
38%. That S&P chart that you're showing monthly,
yes, but
that's 38%.
before we talk about the charts, let me, talk about some psychological thought about the market before we introduce the chart, if that's
Okay.
okay with you.
Yeah, sure. Go ahead.
Okay. What I have noticed in the recent Shemitah's days is it's already happening before big events. Last time we had the Lehman Brothers collapse. Before in 2001 we had the terrorist attack. There is always some trigger for bigger move, and that's when this aggressive move happens, it's already within the trend. If you know what I mean, because it's not just one day event. The market has already some tops before. A few months ago, and the move already starts. And when there is just one big day when you get the
Yeah, you weren't alone looking for another high up towards 2200 before it
yeah.
broke. Do you think it
But
could recapture that now, or the best case is this is a big B or two that's developing, and we're going to have a failing rally?
Well, for now, it's going for me. I'm going with the failing rally because I think it's time to have this correction we've talked about a long time ago, and still have some structure missing. And to be honest, if you check every time we have a top, we we have at least 20% correction. And for now, the market is looking. It's starting the bearish moves. If you check the daily charts and for our charts, it's just failing rallies, and that's the beginning of a bigger move. It's how the market works. But for this time, I'm thinking that there no need for big events to happen. It just could be driven by the fear. If you mean the media propaganda that's happening, the recent months about China, about possible crash, about many things, about the Fed not raising the hikes. It's driving people crazy, and people are becoming afraid. And when people are becoming afraid, they want to take the money off the table, and that's when you have the spikes, and with low liquidity, and it accelerates the move. If you know, sorry.
Where's money going to hide? Are people going to come out of the dollar during this sell-off that you're expecting, or is the dollar going to remain strong in a haven? What's your best guess?
If you take the recent recent few years, it's been all about the dollar. But I don't think so this time, because the recent year, dollar just started going along with S&P and the rest of the indices. So it's, I mean, showing same patterns, same path. So I think this time people are going to seek other safe havens, and maybe because the war, the currency war that we are having around, will have high yield seeking this time, and we will get the spike in euro, to the upside, the pound, the Aussie. I mean, everyone going to sell the dollar if this is going to happen.
Okay.
But
Okay.
let
Yeah, because they
me.
do the patterns. The only difference is magnitude. You know, they both crashed together. The Dixie to that 92 level when the S&Ps went to 1830, and the dollar recovered much more and has been, the way I've been seeing it, less willing to give up the gains when the S&Ps were under pressure last week. The dollar actually rallied on Draghi's comments, which kind of was a disconnect. We had a strong dollar and a weak market after
Yeah,
that failure.
but for now they are. I mean, they're maybe breaking the patterns, but they usually it's a small time breakout before they get back again to follow each other. Okay, let me speak about the charts. I think it's better for me without talking too much.
Oh,
I'm not.
Alien, you're doing. You know, all I could say is this to you. Ready? Hold it. Yeah, people will know what generation I'm from. So let me just show myself here. Ready?
Okay.
Nanu, 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 Nanu. I'm Mork from York. Nanu, Nanu. Okay, go ahead, buddy.
Okay.
So for so for Mork and Mindy, you're doing fine.
Okay. I'm okay. I'm back to showing the charts.
Okay, Nanu.
Okay.
So I like where you're looking. You know, I looked at this months ago, and that would be just such a natural place for the S&Ps to retrace to. You had that breakout and never looked back from the
Yeah.
07 high and the 2000 high, and that's actually 38% back from the whole bull move from 666, sign of the beast, to 2130, right around 1560.
Sorry, Dale. Do you hear me?
Yeah, I can hear you. Can you hear me?
Okay. Yes. So I thought
Oh,
we were
okay.
disconnected. Sorry.
Okay, I'm here.
Okay. Continue. Go ahead.
No, go
Continue.
ahead. I think it's interesting where you think the S&Ps can pull back to during this corrective phase, because that is 38% back. It's a breakout.
Yeah.
Lots of confluence there. I think there's even some long-term moving averages that come in there.
Yeah. I mean, it's normally that the market retraced at least 38% to continue high. But what I want to really point out this time, I'm thinking the time aspect of this, because I mean, what's more important for me is each time we have this big events, when time, I mean, when we reach the time, the price start moving, and
Oh, okay. I
I
see what you're saying. That 2000, it was a.
I mean,
Are you
I mean,
measuring the declines there? 17 months was a declining period.
no, I mean, it was
Between.
17 months before. I mean, there was the top. After 17 months, we had the
Okay,
Shemitah, and just,
I
I
see.
mean, it was a crazy move, but the market just continued declining before bottoming. So
Okay.
it's the same here. Uh, but in 2008, it spent less time between. I mean, the market topped and only spent 10 months before the Shemitah arrived, and the tops real quick. The bottom was after just few months. And this time it's less time. Every time we have some big major tops, the Shemitah is approaching with lesser time. So that's why I'm guessing the next move will not last that much. If they are calling for a bigger crash that's gonna last years, I'm not thinking so. I'm just thinking this aggressive correction we're gonna have just to retest the previous breakout before we continue higher.
Okay, so what's your best guess for the time frame for when this will be completing?
If we're going to finish this move around on the coming month, maybe probably before the next year we will be just about to make the bottom and start rallying. I think.
Okay, so you think this correction, a lot of people are thinking we're just going to have an October event and then we're off to the races. That would be pretty quick. That would be even quicker than you think, right? So could it stretch into the end of the year, November, December?
Yeah, it could be, but this is going to be so quick that everybody will be surprised, because every time you prepare for something, the market gives you the opposite. So when everybody is thinking this going to be a big crash and it's going to be lasting for at least maybe half year or a year, it's going to be quick and take everybody out, and no one will be able to catch it maybe. But the most important thing about this is the trading opportunities, because every time we had these events, if you look back at September 2001, after this this week of the Shemitah week, we had the bounce. We had exactly a big bounce. We have the biggest drop in one day at that time, but we bounced it, and few months later we made the bot. It was the same after September. When the crash happens, there will always be a good opportunity to catch it, and I think this area will be the next big one, because if S&P bottoms right there, it will be a nice opportunity to go long for the dollar. Let me show.
Oh, okay. So the dollar sells off until the S&P's bottom, and then we'll start another bull market in the dollar.
Okay, 1 second. I can change my screen to the other. Okay. You are now seeing the. Are you seeing the dollar index?
I see.
Okay. So, if I don't wanna discuss about the classic analysis, because this is a triangle or a flag, and if it's going to break out to the upside right now, everybody can catch it. If this break out to the upside, you can just buy the pullback. And for me, it seems too good to be true. And the market never gives you this kind of opportunity, but it works. So if we're going to break in the coming weeks to the upside, it's easy to catch this kind of trades.
Okay, so now we're saying the S&P could crash and the dollar could go to 102.
No.
Okay.
No. Sorry. I put this screen just to show this is how it's. How simply is that to predict a breakout? But I'll show you my view.
Okay.
I'm taking the time of the next event. If the next week is the week of the Shemitah, and there will be something. There will be some moves. I calculated this and found it coincide with the the exact time when the dollar need to finish the correction. We
Okay.
all.
So why do you believe in this Shemitah event?
I'm not taking the Shemitah as a big event, but I found events that trigger the moves. I don't care. It's Shemitah or maybe some. Some comments from some feds or because just it coincides with the time zone of my cycles. If you take Gantt cycles, you will find out that on this between 15 and 14 September, dollar needs to end the correction because spending 1 year going up, you need at least 50% of this time to correct the move. And we already entered this zone. I mean, if you look, the first time we entered the 50 and 61.8 time zone, dollar just started crashing down. I mean, it has to finish its 50 back correction, and with the deadline approaching, if when the time arrives, price moves. This is what Gann said. So I am calling maybe this is a crazy move, but the market is crazy and could happen in the coming days. We could just have this crash to finish this. This move. This let me 600 pips move. It's a big move, but there is no need to have an event to have it. Last time we had the Black Monday. Euro just went up for 100 pips and everyone was blasted out. So you don't need to have an event to cause the move, but you have just to get the right time when the move happens.
Yeah. So your target, I've seen that 89 number before.
Yes.
But if you measure the triangle from the peak of over 100 to 93. It classically would measure 86, wouldn't it? Just the length
from the breakout.
The whole triangle, yeah.
From the breakout.
Yeah.
Yes.
85.
Yes, you are correct. But
you don't think it'll be that deep?
No, because
It's just a panic move. So we're looking for a panic move similar to what we had a few weeks ago.
Yeah.
Only it's going to be a breakdown in the dollar.
Yeah, it will be a quick breakout to reach the target before. If you remember the Kiwi chart, when the cycle ended, it was the last day, and just when Euro and everyone else were, the rest of the pairs going up against the dollar, Kiwi and Aussie were trading lower. And why is that? Because they needed to finish the target. For me, I take this technically, and
what do you think? So, are you saying you've mentioned the commodity currencies a couple times? That when we get this dollar decline towards 89, that the commodity currencies, which are high-yielding currencies, will outperform euro and pound dollar?
Possibly, because if you are seeking to save money and stay away from this crash, if you want to just leave the money and to save it, you go for high yields. That's how it works. And this time, if everybody is afraid for the dollar and the Fed is not going to be raising the rates.
Okay, so you think that could be a catalyst, is that Feds don't raise rates and the market's saying, just like really the break began after the minutes when people didn't think they were going to raise rates. Okay? Okay, I got it.
The move could trigger.
Dollar suffers because the market's positioned for tightening.
Yes, but
and it's a disappointment to the dollar and equities that the Fed is afraid to tighten because the market believes they see some problems with the economy.
Yes, exactly.
Got it.
Because if you look back last year when you remember the September meeting when everybody was expecting the Fed to to stop the QE, and they postponed it to the end of the year. Did you? The expected move didn't happen, so it was. And this is rallied, and the dollar rallied, and now this is maybe the opposite to what happened last year.
I hear you.
Because this is causing a real problem for, for investors and for the economy, and this is what could trigger the next transaction between safe haven getting away from the dollar. If you know,
so then even emerging markets, which have suffered greatly under the duress of a strong dollar, would have a relief rally while the dollar's selling off, don't you
possibly.
think?
Yeah, if you remember the last time we shared the chart, we were about to break out.
That's why I brought it up.
Yeah, we had the breakout, and we are almost reaching the, the target for the, for the measured target for the move, for a three-wave move. So we can have a pullback, and it's all correlated between these events, and the technical view is. It's pointing to one direction. Even if you can take a classic move.
Even the yen is confirming this view, isn't it, Alien? Where we get this break in the dollar and we'll go to your target, 109?
Yeah, 109, 112. This is the area we have been talking about. Yes.
How do I remember your targets that you showed me a month ago, huh?
Yes.
I'm an elephant, man. You may be an alien, but I'm an elephant. Yeah. And elephants never forget. What's my name?
Your day. Come on, let's.
Who am I? All right. Well, I think this was a great presentation. I know if you have more, it's fine. But this is really gives us some excellent trading opportunities setting up in the next 5 to 7 trading days or so.
Yes. What let me show before we finish. Let me jump to the euro chart quickly.
Sure.
Because the euro is about. This is a clear channel. You can call it the bearish flag, and everybody is expecting. Let me move the box.
Everyone thinks we're going to break this uptrend this time.
No.
Oh, okay.
Because when you, I check the public view and the percentage of bearishness, etc., and see other charts. Everyone is expecting this move. This is, this could be a nice move to the downside.
Yeah, so even if you're looking for lower lows, new lows for the move in the euro, there's a nice trade setting up from 109 and change back to 114.
Yes, because we already, if you see, we already get the bounce from the pound these recent days, and we were expecting the same for euro. Maybe euro is a bit weaker, but we will get this move. But what I'm calling for is big spike.
Yeah. And you showed another chart that shows euro going to 163. I only know one other guy that's looking for that. You accidentally showed it, I think.
Which one?
Do you have a long-term chart that shows how it could go to 160? Or was I imagining it?
About the euro?
Yeah, I think you had another euro chart that showed. Yeah, no, there was another one before that. I don't know. Maybe I imagined it. I had a flashback. Okay. Don't you have like a monthly or something that was showing that, or a weekly? That you clicked on?
No, not
very bullish count in the euro.
Yes, the big monthly to 16.
Okay, so you know what I'm talking about. Don't make me think like I'm crazy. You did show that.
No, I didn't show that. No.
All right, let's see it. You did. You did. I saw it. I didn't imagine it. Let's see it.
These are the charts in front of me. All the charts. I didn't show it.
Okay. All right. Anyway, there we go.
Maybe you saw. I think you saw the dollar. This is the dollar.
This is the pound.
The pound.
The pound. Okay. All right.
I mean, this is the bullish count for the pound. If we are going to break out to the outside, we're gonna visit 166. It's the same if we are going to break with the euro. We're going to see high move.
Okay.
But I mean, the trading opportunity are already happening. You can buy the pound or in the pullback if you are not long from last week.
Yeah.
But this you have to be careful about these levels, because if you are going to have failing rallies in pound and in euro, so this could be the next big move that everyone expecting, and this is a classic move. So you can trade it either way. But what I'm really calling for is the next week big spike, because it happened many times when I mean there will be, I mean, maybe with the Fed, maybe with the Shemitah, I don't care which event, but we are approaching a deadline for the dollar to finish the correction, and it needs to reach this target. So
I think it's
maybe
not. I don't think it's the Shemitah or the Fed. I think it's the Shmed.
What's that?
It's a combination of the Fed and Shemitah is the Shmed.
Okay, the Shmed. Okay. So
everyone on the lookout for the Shmed next week. And thank Alien for some great ideas.
Okay, I mean, do you agree with me, Dale? If everybody is afraid and we are approaching these events and the media is talking about, and we are approaching a big weekend, so maybe in the weekend everybody starts pulling money or taking profits, and this is will cause low liquidity at the start of next week. And when there is low liquidity, we always get this spiky move. So be careful out there.
All right, great presentation. Thanks for hanging out longer than usual with us today. I know, Alien,
No problem,
usually you get in your ship an hour earlier than where we are right now, because you have to take your serum so you could adjust the atmosphere in Tunisia. So yes. Thank you, buddy, for all you do in our community.
Hope it helps everyone. Thank you.
It will. Help me. You help me, buddy. You help make LAR great, Alien. Who agrees with me? I think Alien, everyone thank Alien for his presentation. I think he helps make LAR great. How about some appreciation for Alien's views? I concur with them. I think there's some great trading opportunities coming in here. I also want to thank everyone else for their contributions today. Rob Kane, Ricardo, Jax, there were several other guys. John showed some work today. So that's a wrap for me, everybody. Enjoy the rest of your day. Get ready. We have some great trades setting up. Keep some powder dry for these scenarios, and I'll see everyone tomorrow.
Okay. Good day then.
All right. Thank you, Alien. Okay, everyone. Thank you. Rank Guy, welcome to our community. Mauricio, everyone else, Rob Kane, Vedran, Lazario, Marcio. See everybody tomorrow. Good hunting. Adios. There you go, Alien. Who loves Alien? Give me a Y. Who loves Alien? Give me a Y. There's my Y. I love the guy. I'll see everyone tomorrow. Arrivederci. Nice meeting you, Pippo. Welcome to LAR. And remember, don't just count your pips, count your blessings. I count this community as one. See everyone tomorrow.